Welcome back, our loyal viewers, to A Talk with Traders. Today, I have the opportunity to talk with Brian Pezim and Jarad Champagne about their view on the markets, swing trading, and day trading. We have a three-way conversation about their perspectives on the markets and how they approach managing both swing trading and day trading simultaneously. Thanks for joining, and I hope you enjoy the podcast. So hello, Brian and Jarad. Welcome to A Talk with Traders. Happy to have you both here today.
Yeah, great to be here.
Thanks for having us.
No problem. So, guys, look, today there's a few things that I wanted to talk about, and it's great to have both of you because we can sort of have a conversation about your respective styles and learn a little bit more about your trading and how you see the markets. So, let's actually start with your with a little bit of your trading backgrounds because you're probably you're well known in the Bear Bull Traders room, but there's probably people listening to our podcast that aren't as familiar. So maybe I'll start with Brian. You, I know you've been trading for a very long time. Maybe you can just give me like a little synopsis. How did you end up sort of day trading and swing trading?
Yeah, I as maybe a lot of people know, the people that have read my book, How to Swing Trade, I started at a very young age. I would say I guess you could say my father got me into trading. He was investing in the stock market, and of course that was many years ago. That was when you went home after work and checked the evening paper to see where stocks had closed the previous day.
Yep.
So obviously pre-internet. And I'd hear him on the phone talking to his broker and placing trades and looking at stocks. And I think at one point I said, when can I buy a stock? Mm-hmm. So he set up an account with his broker for me, and I bought one share of a company called Bell Telephone at the time. It's no longer called that, but I still have that one share today. And awesome. Yeah, that's really where how I started and got interested in trading. And then when I moved to the coast, I happened to meet a few stockbrokers at the time, and they started getting me into IPOs, initial public offerings of small companies on the Vancouver Exchange, which existed at the time. And so I got, and then I got more and more interested in that. And then, of course, the internet came along, and I started, I guess, essentially day trading during the internet bubbles when I really started trading actively, and made a lot of money, and then gave it all back. And it was a hard lesson, but it was a good lesson, and learned a lot from that experience. And so just taking it forward to today, where doing a bit of day trading and some swing trading, and of course I have long-term positions as well. So just that's kind of where how things evolve for me over time.
Well, obviously you have long-term positions if you still have that one share of Bell.
Exactly. That is probably my longest. That would probably be my longest term position ever, for sure. Yeah.
You bet. Well, you really went from extremes there, because I mean, there's probably nothing more blue chip, at least not in Canada, than Bell Telephone or Bell Canada as it is now. And to go from that to trading IPOs on a venture exchange, the Vancouver Stock Exchange. Wow, that's sort of extremes and back again. So
yeah. So like I said, I've traded pretty much everything from startups to really well-established sort of what you would find in your grandfather's account, earning dividends. And the funny thing about that is that, I started out with that one share, and I think I've got about 50 shares now, because it got into this dividend reinvestment program. Right. Rather than getting checks for 5 cents every 3 months from Bell, I just started reinvesting it, and it was, yeah, it's turned into about 50 shares right now. So it's been, I think I figured it out once. It's about a 7 or 8% return. So it's been okay in terms of capital.
Well, you know,
Yeah,
it's a stable 7 or 8% per year
yeah,
for,
50
decades
years.
is
Yeah,
good. It's good.
Hmm.
yeah, it is probably about 50 years. I
Oh
guess
wow.
I think it was about 16 when I bought it. Yeah, so there you go. Just gave away
Wow.
my age.
Yeah, well, I mean, you don't look a day
A day
over
over.
18. All right, well, so Jared, how about your background? I bet you didn't start with a Canadian telephone company, but how'd you get into
That's
trading?
correct. That is correct. Yeah, my story was a little bit different than that. So, for a long period of time as a software engineer, which is actually my main career at the moment, um, a lot of my investing experience had been through Roth IRA, through 401k contributions, just that long-term mindset and starting to understand value investing as I was getting more mature into my career itself. Around September of 2018, I discovered Andrew's book, and that's when my exposure to more of the day and swing trading styles became more aware of how to profit off of it, how to actually utilize it as a new way to invest or obviously trade in these markets. And when I first got started, I wasn't really sure if I was going to take on such an endeavor because I knew it was a time commitment. I knew that there was going to have to be a lot of basically changes in both my management of time and just overall psychology with how to trade. Uh, so
For day trading specifically, or both day trading and swing trading?
I would say for both, but
Okay.
ultimately for day trading, I knew that that would have to be a pretty significant commitment because at the time I had no intention of ever stopping my career as a software engineer. I certainly wanted to just expand my avenues of knowledge. I was interested in the topic pretty heavily at the time. I was starting to learn things like options on the side and just trying to expose myself to what's possible.
Right.
So in that time, September 2018, started the entire process of reading, learning, watching free content, exploring what actual available services are out there for people who want to trade, and then ultimately landing with Bear Bull, uh, starting to get into the sim and live trading, and obviously building styles from there, trying to explore different instruments as well, because the market is so vast as to what you can do and how you can trade, regardless of the time frame or the instrument that you use. So that was the big challenge, is just landing somewhere that I was comfortable with, knowing that I had a full-time career on the
Yeah.
side.
Well,
Yeah,
and
and
that's
that continues to be a challenge today.
sure, sure. I mean, yeah, there's no way to know it all, but that's a good place to dig into because, as you say, you can't sort of know the entire breadth of the market. However, Jared, you run a show in the mornings every day. The market is open, engineering the markets at Bearable Traders, which and you go over the markets in general, right? You sort of talk about general trends, where the industry and segments are going, and what you believe we can expect out of them and their relative impact. So
Mhm.
how do you I guess well, let's start there. How do you see that as an important part of your trading strategy, and how do you find time to do it?
So for applying it to intraday, it can often be as simple as seeing something active in that morning session, noting it as a larger event as opposed to one or two individual stocks that may be moving on a catalyst, and just knowing that often if you see significant strength or weakness in a certain sector, in a certain industry, you can sort of eyeball the best candidate in that area and find an opportunity intraday. So it can be as simple as just finding that spot, knowing where to look, find your candidate, and ultimately trading it successfully.
So
That's more
you
the intraday perspective.
right. So use it as a macro view that allows you to narrow into specific areas.
Exactly. And
Okay. Now,
then
Sorry, Jared. I wanted to ask Brian. Like, is that sort of how you do it as well? Because usually when I hear you, like, you do a lot of market analysis overall as well, but you tend to start with specific stocks you have an interest in. Maybe I'm just seeing the end of the process. Do you use the
Yeah,
same filtering?
yeah, that is sort of the same thing that that Jared was talking about there. I do, I do a lot of analysis of, the broader market, where money's rotating in and out of. I also look at, specific stocks that are not just that don't just happen to be in play, on that particular day, because of course, they've released an earnings, some earnings news, or some other news that are, causing them to be active on that specific day. But there are other sort of, I would say, more macro trends, or stocks that tend to be trending for multiple days, and I'll pick those up on sort of swing trade scans, and either have them as swing trades, or have them in my watch list for a day trade at the open. And yeah, and occasionally I'll have some random stock or two up in my watch list when we post those in the morning, and people will be going like, "Oh, where did you get that from? That's not on the Gappers watch list." Or
Right.
but it's usually something that I picked up that I have some specific interest in, that I might see as being active for more than one day. UPST is one stock that I did a bit of a swing trade on, but it started to get active sort of before it started showing up on the gappers list. So that's an example of that. And like Jared just mentioned, there's the other things that I like to watch, like specific sectors that might be in play. So we talk about different ETFs, like XLE, which would be in the energy sector, or the GLD, which would be a way to play the gold sector. Not GLD, GDX, which would be a way to play the gold sector. So keeping an eye on those as well.
Mm. And do you use that sector information mostly for your swing trades? Because you sort of talked about both. Like in the middle of the day, will you use that sector detail to say, oh well, the whole sector is going up, therefore something you may have a specific interest in as a traded stock, will
Yeah.
influence your trade, or is it really more, just for the longer term overnight holds?
Yeah, I mean, usually the sector trades aren't just overnight holds. Usually it's specific stocks.
Mhm.
But if you, for example, we've had a nice little run up on gold over the last month or so. So that the easiest way to play those kinds of moves is with ETFs, rather than picking out an individual stock like a Newmont, any NEM, or like a Barrick Gold. It's just easy, just throw your money into an ETF. Like the GDX or GDXJ, which would be the junior gold miners. Or if you really want to get aggressive, you can find ETFs that are, double and triple betas, like for gold, for example, it would be Nugget and UGT. So, if you feel strongly about a particular sector, and you want to get in on a swing trade, or even if you want to trade it intraday, you can get more aggressive with ETFs versus just trading individual company names.
Right. Jared, similar approach for you. Will you use those to, take directional sector trades, or do you tend to just use them as indicators for individual stocks that you're looking at?
I would say more the former.
Okay.
Often I'm looking for sort of changes in trend with a lot of exposure to one thing that's been working for a while. Often that's usually when that one thing stops working. If everybody knows about it, it often tends to be the end of that move. So I'm looking for sort of the next big thing to change. And usually it's similar concepts. It may be something like clean energy, which may or may not be starting to sort of awaken around this time, and has been sort of in the back burner for quite a while because it hasn't been going up very often. So looking for that shift to occur, looking for the right signals to see if anything's actually indicative of that. And then usually trying to position early, allow for the change to
Mm.
occur, people to start becoming more aware of the change, and ultimately looking to kind of be conservative to profit, because usually it starts to ramp up and then dies pretty quickly after that. So try to find shifts in things, and specifically with gold, I found it interesting that we were not really looking at gold directly. We were looking at things like the dollar index, which has been, for the most part, on a nice decline ever since sort of the COVID lows. So finding good inflection points in the dollar led to a really great sort of buy signal inside of gold, and so far that has played out quite well.
Right.
Yeah, Jarad just brought up a really good point about the clean energy, and that's one of the few sort of trades I'm in right now, which is, again, it's the company versus, do you trade the specific companies or do you trade the ETF? And I was keeping an eye on plug and fuel cell companies like that, those alternate energy plays, and I thought they were kind of starting to bottom. So I got into the ETF called ICLN, which is just the clean energy ETF. Right. So rather than pay, I guess I could have played plug, or I could have played fuel cell, but I chose the ETF instead. But that's an exact example of what Jarad was just talking about there, looking for a trend change.
All right. This is great. I mean, because you both tend to, you're both swing traders and day traders. Obviously, Brian, you've authored a book on how to swing trade. And what I'm hearing from you is that you use this information, I guess, to not only inform your swing trades. I mean, you've clearly said that, right? That you sort of look at the sector and individual stocks, and it'll help you understand where the sector's going. Do you find it gives you like advance notice, I guess, of when things become day trade eligible, or is it sort of a different process to find them? Because like when we day trade, at least in the Bear Bulls trading room, we tend to use a gappers list. So it's stocks that have moved that morning. Usually it's news related. Sometimes it's entire industry or segment related, but you'll find things on there, and we look for, what's moving the best, what has, what is in play, meaning it's got a fair amount of volume that morning and it seems to just be, moving fairly well. But do you get like again, like sometimes advance notice where you'll be watching things for a few days, and then when it hit, I don't know, does it hit the gappers, and then you say, but I've already got some familiarity with what I think it's going to do, not just the fact that it's gapping? Or is it a whole different process when you move to day trading?
No, it's pretty much what I said. Like it's probably, as far as my day trading goes, I would say anywhere from 80 to 100% of my watch list as we go into the open will be will be stocks in play, like this, what you were talking about, going through the gappers watch list, right. Looking for things that are active, because those will typically be the best opportunities. So having said that, I've always got a few stocks in the back of my mind, maybe on a secondary list that I've picked up from swing trading. Sometimes one of those, if there's not a great number of opportunities or good looking options for the open, then I'll move one of my swing trades up to the my primary watch list, or if I really like it, I will put it up on the primary watch list. So one or two of my swing trades can show up on, or swing trade ideas can show up on my primary watch list, but not necessarily all the time. Right. Just really depends on how the morning's looking overall.
And do you find, like Jarad, in your case, do you find, if and when that happens, does it give you a feel for where you think the stock's going to go? Like Brian was talking about ICLN, for example, and fuel cell or plug. Do you find that yourself, okay, well, I believe the industry is going up over time, but on an actual day trade, the stock may or may not go up on that day, right? Just because the industry is going to be moving up over time. Do you find that background, does it bias you to your benefit, or do you find it almost a detriment because you come in sort of with an opinion as to where it's going to go? Yeah, the bias.
Right. Yeah, that is a hard thing to balance, because the mindsets are different. As a swing trader, you're looking for a longer term perspective, and ultimately your risk definition is larger than most of our intraday sort of ranges that we play around in. But In the case where maybe I have high conviction about a sector or an industry that's moving that day, whether it be one stock has a catalyst and it's kind of dictating the directional bias for the whole sector or industry, or there's just some reason for money to be flowing into that area. A really simple example would be if you're watching crude contracts and you're just seeing that crude is up pretty strong that day. Well, then I can be looking at energy and just sort of pick the best energy stock that has the best volume, the best maybe gapper if it has gapped at that time, and then just look for that, simple 1 to 5 minute setup that allows me to get into a trend that may already be starting with things like the back end, I would say like item of interest for energy, crude or natural gas being up that day. So it's once again that top-down approach. I'm looking at a few things to see, yes, energy may be up, but crude is flat. So maybe that's not a high conviction trade at that time. Or energy is flat, but the oil report is coming out later today. And I believe that that oil report will be a catalyst for energy, which is already bullish. And, just putting that together sort of in the back of my mind, allowing it to be a secondary until it triggers, or if everything's lining up really well in the pre-market, I can at least assume that there's a lot of eyes on that trade and look for that as a just a general, watch list, energy sector as a whole, not
Right.
one stock.
Right.
So,
Excellent.
Yeah.
So, changing gears a little bit, I'm curious about your tactics because we're talking about how you identify stocks. I'm curious about how you actually trade. So, from swing trading to day trading, let's start with swing trading. For I guess both of you, are you still technical traders? Do you find yourself leaning on fundamentals more? Is it some combination of the two? How do you actually make a trade decision and determine sort of entry points, exit points, targets? What do you use for that?
So I'll go ahead and start on that one. So depending on what I'm trading and the instrument that I'm using, I may have different tactics. I may find that something is getting into a buy zone, but it's been in a pretty strong downtrend since that point. So the buy zone may be correct, but there's not a lot of upward momentum. And in those cases, I don't necessarily want to lock up capital waiting for the trend to change or the setup to actually trigger in the opposite direction, nor do I want to necessarily risk more downside if it does occur. So often in those cases, I may put on smaller option-based strategies, something where I can define my risk pretty clearly. I don't have to worry about a lot of capital lockup, and depending on what I'm trading, that may be the best advantage because there's other factors in play,
Right.
other Greeks that I can take advantage of.
Right. But all of what you just said sounds like it's a very technical approach. Like you're not necessarily looking at the price of oil and saying, I think it's fundamentally undervalued at this point. Or, you're looking at oil inventories and saying that, hey, I think they're increasing. Therefore, the oil, price might go down because inventories are going up. You're more looking at sort of technical signals within the industry and chart patterns.
I would say for swing trades specifically, yes.
Okay.
If it's more of a core trade, something that I expect will take a full market cycle to kind of resolve, let's say I believe we're going into more of a full recovery phase, and I believe certain stocks are going to perform better in that phase versus others, I may just buy the shares. It would probably be in some other type of account like a Roth IRA, where I can just lock in a fundamentally strong company in that case that hasn't been seen a lot of love in the past because no one's necessarily interested in it at that time.
So do you have you just introduced a term there, a core trade. So I assume that sounds like it's a longer term trade than a swing trade. So
Right.
you would consider that. Have you got specific rules around that, or is it just, a core trade is something you would hold more than, a quarter or more than I don't
Yeah,
know.
I would say it's usually based on fundamentally undervalued and interest in that particular stock or sector. A good example would be Costco. So Costco had a pretty recent downdraft, and it led into a structure that technically looked like sort of capitulation and essentially V-bottomed from that, recovering most of that drop, if not all of it at this time. I believe that Costco was undervalued at that level. So from a technical level, is the right buy zone, but from a fundamental level, it made sense as well. I went ahead and initiated a core trade position in that. And until Costco is fundamentally overvalued, I don't really have intentions of selling it. In fact, if it ever does give me another opportunity, I'd almost want to accumulate more, because at this time, I believe it's still somewhat undervalued.
Right.
So it combines a little bit, because usually a fundamentally undervalued company on a technical downtrend still doesn't necessarily make sense to initiate too much of a core position until you see the tides turning, at which point you know the company's still undervalued, but you may be getting a better price.
Right.
So sort of a momentum core trade sort of turnaround play, usually on the downdraft is what I'm looking for.
Got it. Okay. And Brian, on your side, how do you, do you use fundamental valuations, or I know you use technical patterns for sure on
Yeah.
your swing trading, but do you find you use more of, you go to some of the fundamentals a little more frequently, or not at all?
No, I would say I do use fundamentals as well as technicals. I guess if you want to put a number to it, I'm probably sort of an 80% technical trader, 20% fundamentals, because I will take trades just based on, what I see as being undervalued, as Jarad was talking about. I'll give you, an active example right now of Ford. About probably 4 months ago, I put on a long call position on Ford at $10. It was in the money at that point, but my whole thesis on that trade was, EV vehicles were, sort of in, or at least a lot of interest, and I knew Ford was basically coming up with this Ford F-150 vehicle and the Mustang. And I knew there would be news flow coming out of that. So it was really, that wasn't so much of a technical trade. That was more of a fundamental trade, knowing that at some point during this year, there would be a number of releases. And of course, we've just gone through two of them where the stock has popped up. And I've just basically been trading around that position. When it pops up, I'll sell some. I added some back when it pulled back a little while ago, and then I've just sold some again as it's popped up on this latest news with their big release of the Ford vehicle, which is exactly what I was expecting to happen. So that I would call that more of a fundamental trade than a technical trade. I really didn't look too much at the chart on that.
Last week you had President Biden drag racing the electric Ford F-150, right? Wasn't he? He was trying to hit. I don't know. He was busy touting like I'm going to hit 80 miles an hour in 4.4 seconds, and then I'll hit the brakes. And,
he reminded me a lot of Doc Brown in that video.
Well, there you go. I didn't.
All he needed was the visor glasses to expand his aviators.
Well, that's what made you happy on your swing trade, anyways.
Well, no, exactly, and that was kind of the splashy thing that I was kind of expecting to happen. And again, that's more of a fundamental story as opposed to looking at a chart and seeing a double bottom. But and having said that, those are trades I'll also look for as Jarad mentioned, looking for that indication that a trend has changed from one direction to another. And again, I guess you could call this latest trade one of the latest trades I've done, which is the clean energy trade. It was somewhat fundamental and somewhat technical. I basically thought that the sector itself had been really oversold. It's been going down for months now. And I just thought at some point it's going to turn. So I thought that the interest is going to come back into it. There's the fundamental component. And then the technical component, it did look like it was getting ready to turn on the chart perspective. So I thought that was, again, the fundamentals were kind of reinforcing the technical, what I was seeing on a technical basis. So so sometimes sometimes I'll use a combination of both. I took a long trade on Facebook because I thought, it had been sold off. The PE ratio I was looking at, it was quite reasonable compared to a lot of the other tech companies. And so, again, just one indicator confirming another. And that's what you're always looking for as a trader. You're trying to look at indicators and trying to find as much confirmation in a thesis that you're developing. Try to find as much confirmation as possible in that thesis. And hopefully that gives you, the edge that you need to make profitable trades.
Right. Now, Jarad, you mentioned options a couple of minutes ago, and I know you're both option traders. Do you find, is it interchangeable in terms of, your option trading? Specifically, in this case, I'm talking about, with your swing trading, or are there specific conditions under which you would prefer to use options versus actually trading the stock directly?
I would say it depends on the cost basis of the position that I'm looking to enter into. There's aspects of what I like to do with options when I'm not 100% convinced of the trade. And usually it's either starter positions that I'm looking to initiate, sort of biding my time and allowing for a little bit of premium collection while I'm waiting for things to change. Or if I'm high conviction, I can use the options as a form of leverage to just kind of add to the potential upside that I'm looking to gain. So in the cases of things like the clean energy sector, something as simple as just selling a cash secured put in something that you want to start a position, and assuming you can buy the 100 shares that you're looking to start, that's a way for you to kind of have a small starter in something that you want to get into, but things have not necessarily turned around just yet. There hasn't been that downtrend break of the technical signals that you're looking for, which usually brings in the buyers that lead to the upside. So, biding your time, using technical levels to define risk versus reward parameters. And then ideally, if the option market is giving you high volatility, maybe there was some sort of back and forth of the price action, the volatility got elevated, you're expecting things to settle at this point, but you don't want to go long or short because you don't want to get whipsawed out. You can use those elevated premiums, define some sort of spread to have your risk defined, and then ultimately just collect money while you're waiting for things to settle, maybe to start to compress inside of the actual ranges of the price action. So it just depends on the setup, the technical setup usually. But if I'm not 100% convinced, I normally start in the option market because I'm not trying to be directional from the get-go. I'm trying to sort of edge into where are the buyers, where are the sellers, what type of buyers are expected down here, and how long does it take for them to actually change the tone of that market or of that product.
So more complicated strategies, obviously leveraging them, but it gives you the opportunity to, sounds like, both do risk mitigation, but also, as you said, when you have high conviction, because of the highly leveraged nature of options, you can use it sort of as a multiplier effect, I guess, for those when you have a strong expected move.
Exactly.
Yeah.
Exactly.
Yeah.
And for me, sometimes I just like options, trading options, just because, if I want to take, when I get back, if I get back to my Facebook trade here, I don't want to fork out hundreds of thousands of dollars to take a 1,000 share trade on Facebook, so I can lay out maybe $3,000 and take 1,000, get an option on 1,000 shares.
Right.
And that doesn't tie up a lot of my capital. So that's kind of one time I might consider an options trade, whether it's just straight buying a call or, financing it by selling another call above to lower the cost of my break even. That's a bit of a, more of a, not say an advanced strategy, but it's a common strategy people use.
Right.
And with the Ford trade, again, it was an options trade because I kind of knew I was going to be in it for a long time. Because it was a leap. It was well over a year before expiry. And, Ford doesn't move a lot, but the options do. So when you get a nice spike on Ford, I got a nice percentage move on my position. Certainly a much better percentage move than I would have got if I owned, whatever it is, 1,000 shares of Ford.
Okay.
So, so there's a couple of, specific times when I would use options, consider
Right.
using options over just trading buying in 1,000 shares of a stock that's trading at $20.
Right.
Yeah.
So
Or
it sounds like there's a
25.
strong consideration for capital management there. So as you said, you're
Yeah,
not tying up as much capital, and it doesn't seem to matter to you what the relative price of the stock is. It's really about what your intent is entering the trade. You've got a premise, you've got an understanding of what you're looking to do with it. It sounds like options may give you more flexibility, and as you said, even more earning potential, like in Ford, versus just the simple strategy, if you will, of just buying and holding
yeah.
the stock.
Again, the price does influence me a little bit. I mean, a stock like Facebook, which is trading for hundreds of dollars a share, I definitely would be more inclined to look at an options trade over just buying and tying up all that capital to own at least a significant amount of enough of a position to make it interesting for me.
Right. Right. Excellent.
Yeah. And then just to add to that too, sometimes an option strategy is your only option in certain cases. With regards to like a hedge against maybe some volatility coming into the market, there are times when the VIX index is at a buy point for me. And I'm not necessarily trying to make money off of the trade. I'm not trying to knock it out of the park with the setup, but I do expect the market to correct or have some news catalyst that's up and coming that market participants may be a little bit shaky on. And that usually leads to a short-term vol spike. So just taking advantage of that and using the index, which only has options to trade against, that allows me to have some exposure. And in the longer term perspective, it protects some of the unrealized gains that I do have in my long positions on the market. So,
Right.
just allowing for the market to correct itself, not necessarily going bearish, but allowing for that quick vol spike to add to your realized gains over time,
Right.
and protecting your downside if something nasty does happen.
Yeah. And look, and we know that there's lots of option strategies out there. We could spend hours talking just about options and how you can leverage covered positions to earn extra earning money on long term holds, I guess. But let's leave that for now because I really want to get into the day trading while we have time because so the swing trading is fascinating. But you both swing trade and day trade. Maybe if I could ask you some. Let's start with some quick questions just to compare styles. A lot of people, let's start with some tactical questions to get them out of the way. Do you use a separate account for swing trading and day trading? Yes or no?
Yes.
Yes.
Okay. And do you have strict rules about not swing trading the same stocks that you're day trading or vice versa?
No, because sometimes I'll look at a day trade during the day, and I'll think this is turning into what might be a good overnight hold or a better long swing trade. So I could potentially hold that into the close depending on the price action going into the close.
Right.
And again, that involves being more of an active trader than someone that's coming home at night and poring over charts. But that's that's the advantage, I guess, of being more involved in the market.
Right.
Mm.
Now,
Yeah.
I want to specify on something there, Brian, because there's an important point we always talk about people, but never averaging down. But there's also another cardinal sin, we sometimes call it in day trading, which is you turn a day trade into a swing trade because you're afraid to take a loss. What you're talking about is very different, though, right? You're into a stock that looks like it's going well, and you make a conscious decision to say, this looks like it's got longer term potential, so I will hold it overnight, rather than saying, hey, this thing hasn't gone up yet, I'm losing, but I'll just hold longer and we'll see what happens.
Yeah, absolutely. That's a very important point that you're making. I will never carry a losing position over thinking, well, maybe tomorrow it'll come back.
Right.
This would be typically a trade that I would have maybe taken in the morning or midday, it's going my direction. I'm already profitable on it. I might even take a partial on it and then hold the rest.
Right.
But I would never take a trade that I'm now in a losing position on and just think to myself, well, I'll take this home and hopefully it'll go up again. It'll be back up tomorrow, because I think that's a recipe for a further failure. Let's just say that, more losses.
Absolutely.
Like they say, right? You if you're gonna take somebody home from the bar at closing time, it's rare that they're prettier in the morning. So same thing goes with
Exactly.
stocks.
Yeah.
All right. So, anyways, I just want to make that distinction because we talk about that a lot, and I wanted to be clear in what you were saying. So that's great. All right, so differences, swing trading and day trading. In terms of strategies, do you have specific technical setups that you will only use day trading that you would never consider applying to a swing trade?
Yes, yeah, definitely. Because as a day trader, I currently tend to mostly focus on what are considered intraday reversals, some sort of general trend that maybe started in the morning or over a period of a couple of hours. I'm looking for the turnaround point, some sort of reversion to the mean, or just kind of getting the best entry point for that change. And when it comes to swing trades, especially last year, which was kind of when I really got into it pretty heavily, I found that the best setups were more momentum on the breakouts, allowing for something already strong to get stronger, and vice versa. But we didn't have a lot of weakness last year. And also looking for just great pullback setups, because it allowed me to define my risk pretty easily with a lot of the trending activity.
Right.
So intraday, I'm actually fighting what most people would consider a trend, but it's usually a short-term trend in the context of a longer-term pullback or buy setup. Whereas a swing trade, I usually need more conviction to initiate a trade and have the right risk tolerance defined.
Right.
So.
Okay. And Brian, in your case, I mean, I know the answer already because you've got some signature setups, I would say, that I think are day trading only, right? Like at the open, you'll look at your Rising Devils, your Fallen Angels, the new lead balloon, as you call it. And, the Phoenix trades. So, and if anybody doesn't know what those terms are, I'd recommend you go to Bearable Traders, and we do talk about those and what those actually mean. But to be clear, those are day trade only scenarios.
Yeah, those are really opening range trades. They typically start to play out within the first 5 minutes. But they're the kinds of trades that I would look at from a swing trade basis typically happen sort of more into the 45 minutes, an hour of trading, where you'll look for double bottoms, or you could see ABCD patterns. Those are other trades that are more typical that can be used both swing trading and day trading. But those specific trades you mentioned are definitely day trading, very early market patterns that we look for.
So, as you said on the outset, Brian, you've got, we'll call it 50 years of trading experience, and Jarad, you described a fewer decades of trading experience.
Yeah, just a few.
But you both seem to have established fairly clear rules by which you will day trade and swing trade. Did you find it tough to get to that point though? Like, was there a point in your development where you were really it would confuse you between what am I trying to do swing trading and what am I doing day trading? Or did you find it pretty easy to differentiate the two and be able to manage those trade scenarios simultaneously?
So yeah, with regards to swing trading, I think the fact that I'm looking at multiple different markets to put on a position allows me to sort of separate myself from the day trading, which typically I only use the actual shares to day trade at this time. It's just an easier way to manage the risk. But most of the time with swing trading, I'm also allowing myself to sort of, postulate the best way to get in. With only shares, it's either long or short, and you're looking for direction. With swing, and especially the way I'm doing it, I'm looking for, does it make sense to be directional yet? Do I want to go aggressive yet and add maybe on a deeper pullback or just size in? Do I want to allow myself to collect a lot of premium in the time that it's just oscillating back and forth? I'm looking for ranges. I'm looking for things that a lot of traders maybe will get trapped inside of in the swing trading world. The market trying to, pull the most out of everybody before it actually makes the move that everybody wants. So that separation and the amount of time it takes to think about how to set up the position allows me to differentiate the two pretty easily. But there's often, bringing us back to a previous question, there are often things I see in the day trading world, and I'm like, well, that's working out quite well today. Let me see if other stocks in a similar area are doing the same thing, and if that's the case, there may be a bigger thing about to happen. So I'm using that day trading info to bring it back to the swing trading world because I can take advantage of both if it's all working out that way.
Yeah, no, I like that. So fairly easy for you to differentiate by the way you approach it, but you can find signals that you can use to say, hey, maybe I should be looking at this a little longer term as you're watching the markets every day. Fantastic.
Right, right.
You find the same, Brian?
Yeah, I mean, I don't know exactly how, and I can add much more to what Jarad said. I mean, I see a crossover to both of those trading approaches, just trading styles, if you want to call them that. There's definitely a carryover between the two. So yeah, I think what Jared's comments were pretty much similar to what I would say.
Excellent. Excellent. So, last question. In comparing the two, I'd love to know which. I guess maybe there's two questions here. Which do you find more enjoyable, if either, swing trading or day trading, and which is more profitable for you?
Yeah, I can start out with that. I mean, in terms of profitability, I mean, I think it really depends on the market. I think right now, swing trading is getting a little more challenging just because we're getting into a lot of chop. We're getting rotation of money in and out of different aspects of the economy, almost on a daily basis or a daily basis. So swing trading's become a little less lucrative, I guess, if you want to call it that, right at this point. But I would say it's kind of 50-50 over the last year. So which one do I enjoy more? I guess swing trading is a little bit more work because, you got to do a lot more research after, the markets are closed. You're constantly looking for setups and opportunities as we've been talking about. Whereas day trading, you can, you jump on and you can trade for as long as you want and then shut it down and call it a day. And then, the next day is a new day. So yeah, I guess I enjoy both. I can't say I prefer one over the other. They're both enjoyable.
Fair enough. Jared?
It's an interesting question because I've only had like 2 years of data points to work through. And as I mentioned, last year was sort of an anomaly.
Right.
But I think last year, I would say certainly swing trading because I was still developing myself as a day trader. I was still going through the rigmarole of actually becoming a consistent trader and really getting my style locked down. But moving into 2021, I sort of reflect what Brian's mentioning. The markets at this time are becoming a little bit harder to gauge. There's a little bit less directionality in certain places, and things are either quick to move, so you can get a 1 to 2 day sort of turnaround play. You could take those short-term profits. It's still a swing trade, but it's not nearly as buy and hold as it used to be. And then from there, just allow that to do whatever it wants and look for another sort of quick setup, just a quick flip. Whereas with day trading, my objective is certainly hitting a goal every single day, and it is a P&L related goal. Right. So I'm looking to basically get that number, whatever it takes to get that number in the time frame that I do have, and then shift into my full-time career. Obviously different objectives and different limitations with what I'm able to do, in that short time frame. So as far as enjoyability, I do enjoy day trading more, specifically because as a moderator, I really enjoy speaking with other traders, even in that short time frame in the morning, and just seeing what they're looking at, maybe giving a little analysis, and even putting my 2 cents in, specifically with what I'm actually trading that day. So that's enjoyable to me more because there is a community aspect to it. I think the swing trading, because I'm not yet as exposing myself to what I'm actually doing, it's sort of a one is the loneliest number in that regard. So maybe a little bit less fun, but certainly still profitable. So.
Oh, well, I thought you might go to the excitement of it. I was going to say, Brian, Brian, there's an example of the youth looking for that adrenaline rush that us old
Yeah,
folk, we're not looking for anymore. So. No way. All right, well, good. So it sounds like you would both recommend, that it's worth considering to any trader out there to look at swing trading alongside your day trading, because it gives you, it sounds like, a little more flexibility, especially during, when market conditions change. Because then you can take advantage of the longer trending markets as well as trying to take advantage of those intraday moves, whatever they may be.
Yeah, I think for some people, obviously, day trading is more challenging. It requires a little bit more quick thinking, and some people, like to take some particular people, not right or wrong, just like to take a little bit more time in considering decisions they're making. So it may not be a fit for them, or it could just be availability. I mean, if you're on, like Jared's able to juggle a full-time job with a bit of day trading, but maybe there are a lot of people out there that when the market's open at 9:30, they've got to be out on the shop floor, or they've got to be at a desk,
Right.
dealing with clients. So, maybe that's not an option for them, or certain periods of the day aren't an option for them. So swing trading could be a better alternative, but certainly if you can do both, I think one sort of bolsters the other.
Yeah, actually, that raises a good point, because obviously, Brian, you're sort of retired from your primary career, we'll say that, and
Yeah.
are able to spend the time at trading, although you've got other business interests and things that you work on. Jared, you're still managing a full-time job. Give me an idea, how much time combined between day trading and swing trading would you say you spend on an average week? Ballpark estimate, 20 to 30 hours, 40 to 60. I don't know. What are you doing?
For
Yeah,
me,
I would.
it's
Yeah.
approaching 40. Yeah, at this
40
point.
hours.
Yeah, especially the day trading alone is about a 2.5 hour window. Engineering the markets, the show that I'm doing for Bear Bull Traders, that alone takes a little bit of prep time, and then
Yeah.
leveraging in, adding swing trading, using the weekend time to assess market conditions and kind of think about the next week. Yeah, it's getting up there to about 40.
Okay. Brian?
Yeah, I mean, I'd be a little bit less. I probably guess I'm around 20 to 25 with, with moderating. I mean, it might be, actually, now that I'm thinking about it, maybe it's a little more. Maybe it's more like 30
Right.
between
So it's,
all the moderating, and then just doing basic research.
yeah.
Takes up a lot of time.
I would argue, having watched you do it, Brian. I mean, you've got all those years of experience, so it does give you an advantage, because you're probably able to do a lot of that work and make your assessments faster than somebody who's just getting into it as well. So
Yeah, well, trading is, you're constantly learning. If you think that that you're going to put 5 years in, or 7 years in, and at that point you're going to know everything and you have everything figured out, I think you're sadly mistaken. I think
Right.
this is a profession where you're always learning. You're always having to adapt with changing markets. Yeah, nothing is stagnant in this business, for sure.
Right.
fair point.
Right.
Yeah, no, good
I
point. Oh, go ahead,
I
Jared.
feel that. I feel that almost 100%, because
Yeah,
starting my career whenever the markets were relatively calm, seeing some of the volatility kind of kick up late 2018, and then obviously everything with the COVID crash, it it just changed my whole mindset of like what's possible, and just kind of changed, like all barriers got removed as to the market can't do this. There's no way. That doesn't make sense. You know, I was put through basically the ringer with last year, because I mean, a lot of people just, they didn't think the market could go higher. They
Right.
thought this had to be the end, you know,
Yeah.
all-time highs. What are we talking about here?
Yeah.
But I mean, everything got thrown out of the window.
Yeah, me
So
included.
learning that, applying it, and honestly just taking it as a lesson learned, because I know I'll be in this career for quite a while. We will likely see something of this magnitude at some point, and at that point I hopefully will be as prepared as I should have been last year to take advantage of it. So it's always a learning experience and a passion project to look back.
Yeah, some great points there. You're right. The market is never stagnant, and as you say, as the old axiom goes, right, the markets can remain irrational longer than you can remain solvent. So
Yeah.
you gotta be careful taking no matter what you're doing, taking too strong of a position and fighting the market. The market is always right. You know, it doesn't matter if it makes sense. It's going to do what it's going to do. So.
Yeah.
All right, last question for you both that I love to ask people. If you had advice for somebody who's starting out today, what's the one thing you would tell them to focus on?
Research, lots of research, education, watch, YouTube videos, read, just get as educated as you possibly can. And if you're just starting out, I would say go slow. Don't do any YOLO trades, as they call them. The all-in trades. Don't risk everything on one trade that you think is going to go your way, thinking you're going to win big.
Yeah, good advice. Jarad?
I would say establish the right mindset as soon as possible when you get started. Come into this with the right expectations, the right sort of passion and sort of desire to learn, and allow yourself to be taught that you are wrong for a long time. Allow the market to sort of humble you slowly and carefully. That really builds up a tolerance. It allows you to remove some of the psychological barriers, maybe not all of them, but ultimately to be in this for the long term, which I think is a lot of people's objective. Always start slow, but allow the market to really humble you first, and come in with the right mindset.
Doesn't it? Excellent advice from both of you. All right. Brian Pezim is the author of How to Swing Trade. You could find that on Amazon and pick up a copy if you're interested in swing trading. Jarad can be seen daily when the markets are open on Engineering the Markets. Starts at 8 a.m. Can be found on YouTube at the Bear Bulls channel. Obviously, the Bear Bull chat room if you're there, or on TradingView. And both are moderators with the Bear Bulls chat room, and you can see them live throughout the market day. So thank you both for being here. I really appreciate it, and have a great rest of your weekend.
Good deal. Thank you, Peter. Thanks, Jarad.
Thank you, Peter. Yeah, thank you, Brian. Appreciate it.